you mentioned the IPO. That's the elephant in the room. The fall in the share price since they were first listed has left many investors in a pretty bad way.
We are still an inherently complex business, and there will be some volatility as we grow organically in the numbers of categories and the number of territories that we operate in. But if we look at the executional risk that we've actually removed from the business since we IPO'd, we were a single category in the UK, and we are now more than 10 categories in our UK business, with operations in Germany and the Netherlands. And so if we look at what we've delivered and the risk we've removed, we've come a long way since that time at IPO.
Yeah, and I think it's fair to say that the strategy that we set out at the IPO wasn't for the faint-hearted. To go from one category, one country with one type of vehicles into what we've operationally built, it was, I guess looking back with the benefit of hindsight, it was inevitable that everything wasn't going to go perfectly to plan. But broadly, when you look across the piece, as Mark says, a lot of the executional operational risk from that has gone. And one of the things that we did make clear through the IPO process was that AO isn't a business for everybody. And so there's lots of different types of investors out there. And so, you know, we were clear that we weren't going to be a dividend stock. We were clear that we were a long-term investment. And so when I look at that long-term view with ups and downs within it, I'm still really excited with the journey that we've completed and hugely ambitious for the journey ahead. So,
but if you look at where the share price is today, roughly £1, and where it was, roughly £3, it's clear that today the city still lacks confidence in what you're promising.
And one of the things that we can do is to communicate more effectively with the equity markets as to how we are progressing against the strategy that we've talked about. And that's one of the reasons that we're here today, and one of the reasons that we're here to be willing to be challenged.
Yeah, and I think it's fair to say, you know, the market will ultimately value the business, and in different stages of where the business is up to, different people will take different views on different areas of the business. If you look at our UK business in isolation, it is a growth business that's growing into categories, it's growing top line sales, it's growing its operational capability, it's growing its resilience. And while it's doing all that, it's making circa 30 million a year of profit, and it's cash generative. And then in Germany, our business, and in the Netherlands, is at a different stage of development. And so, you know, so the market will balance that, and different people will take a different view on how you value that. Our role is very much to deliver against the strategy that we've set out. And I think that broadly across the piece, we are delivering against that. And from a European perspective, we're very clear that our ambition is still to be profitable in that market in FY21. And what we're working through with that now is now we've built that, you know, we've built some scale in that business, is which bits of that can we dial up and which bits of that can we dial down, what makes sense, what doesn't, and, you know, how do we accelerate that?